Well, the bias, even with the slight weakness that we saw filter through yesterday, has been for further rand gains. What's your view on the levels we're at the moment, where we've had both our own Reserve Bank governor and the IMF saying that the rand does look overvalued?
Hi, Alishia. Certainly the market has shrugged off any sort of verbal intervention that has come from the central bank governor. And, the rand remains the darling of international markets as all factors are aligned at the moment. Very, stable equity markets, a weaker dollar, strong commodity prices, lower current account deficit. The list goes on and on and on. And obviously always in the background is the MTN Bharti transaction, which could attract substantial inflows into the country. So at around about 742, we've seen very good performance today given the factors that are taking place in the market. If we close below 740, then certainly that paves the way for a move towards 720. But we'll just have to see, given the event risk that we face today, how the market closes this afternoon.
Of course, we've got Governor Mboweni talking on Thursday at the SARB's AGM and to Parliament as well on Friday, both key forums to talk down the rand if he wishes to do so. To what extent do you actually see that coming to the fore then?
I think the authorities are very concerned about the rand. Our manufacturing sector has been in the doldrums for a long time now. Our exports are suffering because of a strong rand, and I think the authorities are right to be concerned about a strong rand. But verbal intervention on its own is not going to do much to sway the market sentiment. And in fact, it's very hard for the Reserve Bank to artificially or to officially weaken the rand, given the fact that the market is just simply so big these days, and the international flows that come in and out of the rand, would quite possibly dwarf any sort of official action that they may decide to take. So very difficult for them to do anything about it.
At the same time, we've got the governor having said that above inflation wage settlements are undermining the fight against inflation at this stage. So what's your outlook on that front?
Well, we've seen drastic interest rate cuts over the last few months. We've seen a slew of labour action coming through and higher than expected wage increase coming through. We've had the Eskom, the price hikes, and to all intents and purposes, that's not the last one. So it's very difficult to see, at this point in time when the global economy seems to be stabilizing, perhaps the Reserve Bank would have a look at a more prudent approach as far as interest rates are concerned. But the debate is still out. There's possibly a room for another 50 basis point cut, but I don't think it'll happen in this month. It's September. I think they'll be on a wait and see path looking forward as to how inflation it moderates.
On the international front, in the meantime, we've got a slew of economic data expected out of the US today. What are your expectations for today's retail and manufacturing data on that end?
I expect, Alishia, that those numbers will show the sort of stabilization of the economic situation in the US. Of course, there's still a long way to go, because the real economy and unemployment is still a real problem as it approaches 10% in the US. They still continue to lose jobs. So the economy is still a long way from healthy. But I do expect the numbers that will come out this afternoon and in fact going forward will show a continued stabilization of influencing factors.
You touched on earlier the fact that we've got a number of factors that are really in line and boding well for the rand strength that we've seen come to the fore here, as we've been getting used to of late. Any moves in gold, of course, is easily reflected in rand movements as well. Some saying the gold rally is overdone, and of course any correction on that front would limit rand gains going forward. So what's your outlook for that relationship moving forward?
Gold is certainly a sort of stronger influencing factor the last couple of the last week or two. And I hesitate to say that the gold run is over. I think in the uncertain environment that the world is in at the moment, many investors are questioning, where do you put your money? What's the safest bet? Do you look at equities? Do you look at bonds? Where do you take the next investment? And everything is really uncertain at this point in time. And in an environment like that, investors look for a safe haven, a store of value. And I think gold will remain underpinned by those factors until we get some clarity as far as the global economy is concerned.
Of course, the bigger threat does remain the euro dollar. After having finally broken 144, the market seems to be facing resistance at about that 146 level. Do you foresee a further break there?
I do see a weaker dollar going forward, Alishia. Of course, it's not going to be a straight line as ever, but there's a whole lot of danger signals on the horizon for the US dollar, and the amount of quantitative easing that they've done has really burgeoned the Fed's balance sheet. They're in a similar situation to us as far as their budget deficit is concerned. They still face major hurdles to rectify economic malaise that they're in. So I am rather bearish on the dollar. Of course, the one caution that I need to say is that the entire market feels the same way, or most of the entire market feels the same way, which means that many of them would be short of dollars. And we do need some more momentum for the euro to the upside to confirm that view.
Well, we saw government bonds follow the rand lower yesterday, pushing the 2015 bond yield up 3 basis points to just over 8%. How have the bond markets been performing today?
Yeah, the bond market's also in a rather tricky situation. The amount of issue that the Treasury is going to have to do just to fund the budget deficit is keeping the market well supported at this point in time. And that's really the focus at the moment. You know, we have the Minister of Finance coming out talking about the budget deficit going to be much higher than the anticipated 3.8%. The market trying to analyze how much issuance is coming out and how much appetite there will be for bonds out there. So, even if the potential exists for lower short-term rates, it's hard to see with the amount of supply of paper supply around, and bearing in mind it's not only the government that's issuing, but a number of parastatals and corporates are issuing as well. It's really difficult to see how the bonds are going to perform positively from here. From my view at the moment is that at best they're going to remain stable, if not the higher yields going forward.